I'm gonna try and record this meeting. Okay, and then we can get started. Right, so great. Basically, what I'm gonna be discussing today is how to spot the good trade that can last in a trend wise and how to avoid the bad ones. Okay, and the best way to do this is to always keep into perspective what trading is all about. Thanks for joining in. So many people. Okay. All right. So the best way to do this is to always keep into perspective what trading is all about. Like I said. So the first thing that I do is instead of wasting time on spotting what is going to work or forcing the trade in one way or the other, I reckon you can quickly scroll through what is coming by looking at the monthly chart. The first thing first is have a plain chart, no indicators if possible, and we start. So what we're looking at first of all is the Aussie against the US dollar. The key thing over here is understanding that this market has been going down, right? And looking at the charts, every single thing that you see on this chart has already happened. What you want to plan next is what hasn't happened, right? And how do I understand what hasn't happened and make sure that I can take advantage of what has not happened, right? So what has not happened is we've seen that on this monthly chart, we have this particular rejection, okay? On this small candle, that's a particular rejection that we have. And that was the month before the last, which is January. And the key thing now is the month of February now, you can see that we've traded below this low, okay? And subsequent to that, we have never found any reason to trade below the low of any previous month over the last couple of over the last, can you all hear me?
Yeah.
Right. We have never found a reason to trade below the low of any of the previous month over the last 3 months. Right. So that in essence, bear with me a second. That in essence is telling us that something negative happened, right? Although after that negativity, the trend still continues to go up. This does not mean that things will go up forever, but this is just alerting us. That trade below the low has alerted us to this might not end up being completely strong, and it might end up being completely strong. On this case, where you have a strong day and then you have a strong month, and then the following month followed with a strong month, you do not have to have a lot of questioning. But this one is telling us that okay, things can turn back down, so we just keep that at the back of our mind despite the fact that everything is going up. So if we're thinking things can turn back down on this particular chart, where are we in relation to other price location? All right, so when you look towards your left, you see that okay, we are around those areas where we usually encounter resistance or some kind of rejection in price to bring price down as well. Okay, so we note that. we know that, okay, well, if there's one thing more than anything else, as much as this is going up, we have a bit of challenge. But the recent high of the structure is very important, which is in this area. So what I'll do is I will choose my monthly chart and have a monthly color and be like, okay, that's my monthly resistance, right? And then more or less like this is my monthly support. So with that, I'm kind of done on the monthly in a way. Reason being, you want to be sure where the key levels on your monthly chart are, so that when you are scrolling down through the smaller time frame, you can then be aware of those levels, because those are the key levels where you actually wanted to act on the smaller time frame. All right, so having said that, we move to weekly. So the weekly now, what we are trying to do is we want to get as close as possible to price, okay? So on this weekly chart, you will now realize that you have a weekly high over here, which is right there. And then I want this to tell me that when I'm getting to this area, I have a weekly resistance. And the higher the time frame, the more significant the level will become. All right. And then I can then say to myself as well, towards this area here, this is the last support that I've seen on weekly. Every other thing that's happened has happened. It shouldn't be of much significance to me at this particular point in time. Then the one key thing that I can measure is measure what I can be playing with on a weekly level. That's about 245 pips from this high up to the low, or from this low to the high. Now price is closer to the high, which means at that 245 pips, I don't have much to go. I have about 72 to go. Okay. So what I then want to be thinking is, if I have 72 pips to go, what is the best trade for me? The best trade would have been for me to make sure that at least if price can hit this high, then I know that we are at a high. What traders normally want to do at the high is they want to sell. Okay. And or the best thing to do as a trader is to sell high prices. So selling here is not good enough, but looking for a sell opportunity in this area can be considered. And the one key thing that I want you to pay attention to is this. If you remember how that monthly candle looks, and then you are looking at this weekly, you can see that after 1, 2, 3, 4 weeks of this particular move down, we now have a significant move over the last 2 weeks. After we've seen this rejection, we have a significant continuation to the upside. All right, you will see it much clearer when we get to a more lower time frame. So we go to the daily chart now. And on this daily chart, what we're trying to do again is we've identified our key location. We know this monthly high is still there. The monthly low is far away. Now what we are working with is this weekly levels. All right. So we're not going to oversight that we still have a huge monthly high. So what we are saying in essence is this weekly level can be broken, find a bit of a retest, and then continuation to the upside, and this will be a huge level of objective. So we are drilling things down from monthly to weekly and understanding the levels that are available. All right, so on the daily now, what we are going to try to be doing is to look for a particular reasons for us to either be a buyer or remain a seller. So I'll choose another color for my daily chart. In this, my daily chart, I want it to be blue so that I know that when I approach those levels, those are key levels for me. All right, so this has shown me in essence that, okay, we've had the first test here, the second test here, and the third test here, right? And what I want to be sure and be careful about is each and every time that I'm approaching all these key levels, those are the place whereby I want to stop and be patient to see what exactly will happen before I follow the trade. So in essence, when I'm getting to this trend line of the daily chart, I want to be sure of what is going to happen, which means I'm not going to be thinking of quickly jumping in. The only time that I will jump in is if it is at the first touch and I'm looking for that first quick reaction, right, of minimum of about 20 pips, right? But if it's not at the first touch, then obviously I want to be patient and see what is actually going to happen. All right, so, and how do I read this? I know we've got this massive bullish candle, continuation, continuation, and continuation. On this day is a special day because we trade below the low and then we trade above the high. So now this day has particularly set the trend for us to understand that, okay, although it becomes so bullish, right, what we wanted to actually do, we have a huge risk happen on this day, but we've managed to now trade above the trend line. The following day, however, created what we call a price slowing day, okay, which means we've got 3 days to understand the kind of decision that's going to be making now. But that particular price slowing day,
Ini uko salama? Tutaniwekea raibina.
that particular price slowing day is the day whereby we never made a new high and never made a new low, all right, but we break above the trend line. So that is in a way positive. So what we would then want to do is quickly go back to 4 hour and then say to ourselves, right, we know where the key levels are. There's one key level over here. There's this key level that we are playing with. And then the 4 hour will now be the trend of the moment that we want to see, that we want to be following. So every single thing that's happened here, we will neglect it. The current trend of the moment is how the price hits this low and start to continue to go up higher. All right. As this trend become invalidated, this trend of the moment, that's one thing that we have to be watching for. And how do we spot that? All this little structure on the 4 hour becomes so important. So you want to be like, okay, this particular chart, until I saw a move, so my 4 hour will be a black, and this particular chart, until I saw or until I come across a move that breaks down this structure, which is this support here, that support here, you can see the way that it's rising, yeah, then I don't really want to be a seller, okay? And I want to continue to be a buyer of this until we get to this particular target over here. Then I'll make a decision to either change my bias. But one key thing that you have to note is for now, the effort to come from here to here will be huge. To make this 61 pips, the effort will be huge. So what is the best buying scenario for me? All right. So if I've missed the opportunity, the best buying scenario will come in a couple of places. You see this low, right, can provide a very good buying opportunity because we've been using it as support, which is the low of this channel, right? This in essence, at the same time, we have this huge impulsive move, then we have a bit of a correction, and then we have continuation to the upside. So this is telling us that this is a correction, and this correction, what you want to do is you want to take advantage of correction by buying the support, because the price has already showed you clearly that it's going up higher. So if the price find any reason to come back to this support level or come back to this area of support that we've seen it um, ranging on, that is the best price to look for buying opportunity. And then that is where your candle will now come into making sense or taking advantage. You can see that each and every time that when we come to this support, we start with a small doji, we nearly come there, we encounter this rejection, we come there again, these little small dojis, and those are your key things that you are looking for when it now comes to the lower time frame. And from there now, you want to take a buy opportunity or a buy position to continue to go to your target over here. So we do not have much of a target on the 4-hour Aussie US dollar anymore. Come Monday, there's possibility for price to hit this level and then retrace back down a little bit again, or even retrace back down to this daily trend line, or even retrace back down to this daily trend line before you think of looking for a buying opportunity. So as we've structured this chart, that is one way of looking at price. What you've done actually is you've set your bias, you've known which direction things are going. All right, there are other strategies that you can now use to pick the best buying opportunity, like considering the fib or whatever. But we will look into all that very soon. So you can see where your weekly levels are, you can see where your daily levels are, and then you can see where we're going. And you know, of course, that when we get here, there can be an opportunity to sell again, right? So it's now up to you to now determine what is my target. From here, do I want to take this short from here to potential this level, which will give me about 250 pips range, or consider it when we hit this level to this level about 94 pips range? What you are trying to do in essence is you are using the higher time frame to be your guidance, and the trades that usually occur on the higher time frame always give the best results, because the most advanced traders, that's what they watch. So your next trade can be to be watching this level. So you done with Aussie dollar, right? You have to use those daily levels and the weekly levels and the monthly levels to be your guidance. All right, so we done with Aussie dollar. We can look at another Aussie again and say to ourselves that Aussie is rising on Aussie dollar. Let's look at what Aussie is doing on Aussie yen. All right, so having said that, we go to monthly quickly, and then I'll delete this. As you can see, the situation with Aussie yen monthly is completely different to the situation with Aussie dollar, because on Aussie dollar, we managed to trade below the low of the previous month. Okay, so what do we want to do in essence? We want to look at this chart and say to ourselves, where are the monthly levels? So the last monthly levels that we've ever seen on this level, on this chart, which is going to be a very big historical chart for us, is we can look at this eye and know that I want to change the color so that I can know when I'm approaching it, and look at this low. So your monthly levels is your key levels to take advantage of price. And what would that do is it will actually increase your odd of a successful trade. So when you're looking at this level, you know price is far away from it. The next level that's closer to price would have been this level over here. It's much of a distinct level, but the key level is this topmost price. How come this one is a distinct level? You can see that at the back of this move up high, when we hits this high level, we find this huge impulsive move, the correction comes in, and then we have the continuation. In this essence, we have another correction, and then we have the continuation in this particular level. So, but having said that, when you look at the structure of this chart, you can see this SH formation, head and shoulder formation, right? This head and shoulder formation on monthly is targeting the high of this level. So you've have that noted on your chart, and you know that this will be a huge level whereby whether you like it or not, by the time price is getting there, you have to at least be ready to take that opportunity that will be coming up. So you've seen that on monthly. We are quite happy with that. We go to weekly, and our weekly now will be getting us closer to where the weekly levels of resistance are. So you can see this level is a good level of weekly levels of resistance. You can see what is going on over here as well. Those areas will be a good level of weekly resistance. So I want to have a color coded level over there to know that I've got a weekly level of 8450 levels over there, right? And those are the levels that will be very good for my risk perspective, because price can hit this level and you have a very good opportunity of risk to reward. Then you have to think of, when I have these weekly levels, right? The way the price is approaching it can really make a lot of difference in how I think. This weekly level is level of mass psychology. There's a lot of traders that's likely going to be looking at this level. So price can actually approach this level and do what? And trade a little bit above it, right? And then start selling off. That is your patience and a very good way to look at levels, because once you know that we are approaching this level with a huge reversal pattern, okay, price can easily come above here, right? While you are thinking of, oh, as soon as price hit 84.53, let me sell, right? But we are coming with a huge trend, which means you can anticipate for price to break the level, right? And be patient. These are our patient levels. These are levels whereby we have to have patience. We have to wait and actually see that rejection. And the way to treat or to find that rejection, I will show you as we are going. So we've got the weekly levels over there on that particular eye. The next weekly level that we can possibly look for that is significant can be this level over here, this low. So we now have a range that we can consider as our level. We know that there's about 1,178 pips level over here from this low to this high. That is our trading range for now. But as you can see, that trading range, we are here now, which means we got about 300 and something pips to go to at least attain this level. So the call is now, do I want to keep buying that 300 and something pips to that level? And when I get there, I'll just take my profit. So you have to use your daily charts to do that measuring. So the one key thing you want to see on your daily chart is you want to get closer to the price. So the daily has given us this opportunity. We have this particular trend that we can look at on daily that we are following. So you know that, okay, if I want to buy next, for me to get a much more better position, if price comes back to this daily trend line, then I can take advantage of price to buy. These are your key support levels to buy from. The next key thing that you can use to take advantage of this daily movement is to look at it in form of a channel as well. The price will dictate how you will look at your opportunity coming up. Okay, so all we want to do with this chart is we want to be a buyer on Aussie yen. We do not have much of a negative bias the way that we see on Aussie dollar, because that monthly candle, we do not trade below the previous monthly candle. And this is moving like it's moving across a particular channel. You can see the way that it's been following and respecting this channel, which means as price is going up now, it has started a very good trending. It is in a very good trending mode. I'm looking at this daily channel as a as a as a guidance for price to at least to keep following till we get to this level of high. Where would my entry be? Like I said, my buy entry will be if for any reason we have a touchback at this daily channel, bottom of the channel support. If I do not get that, what do I need to think again? The next way that I'm going to think is, where can we eat that will give us that level? When you look at this chart, there is a middle part of the channel, and in that middle part of the channel you are seeing a couple of reactions, right? So as the price has managed to fall to the bottom part of the channel now, what you can anticipate is when price gets to this middle part of the channel, we can have a little bit of a rejection. I'm just saying, it's not like as if I want to put any certainty at the back of it, right? But because we are in this area, we can have a bit of a rejection that can send us back down here again, okay? When we touch that middle part and then we continue to go up, price does not usually move in a straight line. But for that rejection to happen, what other things are there? This resistance area has been passed already. All right, so price has got some kind of a free flow to continue to go upside. So on this, I don't want to be waiting too long to see the opportunity, because this guy can just continuously proceed higher. So I want to then go to my 4-hour chart, which is where we are now, and then start to look for whether I can see any potential opportunity coming up. So on the 4-hour, as we are using this channel as our bias, what we can then do on the 4-hour is look for a quick, huge level of resistance, which would have been that particular one on my 4-hour chart, right? And then obviously we have these middle parts that can act as a place where price can fall back into as well. So you can see how we break this and we continuously come back down in a corrective manner. This impulsive move, right, gives us this correction. It is clear. And now you can easily see that the next thing that we are seeing is continuation of that impulsive move. Okay, so we've got a bit of slightly impulsive move here, which is not so much of correction, right? Another impulsive move, and then we have this whole lot of funny little move down that end up becoming a correction and then continuation. But what I want you to count is this. I need you to count this wave. This is 0 to 1, right? There is what we call 4 wave of success. So that is wave 1 in a way. It's like an ABC pattern. And then this would have been a continuation for wave 2. Right, when we are still on a level on wave 2, it's actually a good practice to know that, okay, we might be looking for 4 waves before this price eventually crack down. All right, so yeah,
Yo, bro, sorry to cut you, please.
go on.
Sorry, where did the wave start? Because you said that is wave 2. I'm trying to know.
All right, good question. Following this channel, right?
Okay.
This is a daily channel, okay?
Okay.
When price hits the rock bottom of this daily channel that we've add from our daily charts, this is the beginning of the wave, right?
Okay.
Because we've hit a support and then a new trend has begun. Okay, so this hitting that support and that new trend beginning will give us from zero, which is from this level of support, right, to
Okay.
this high level, and then coming back down to this area of that daily channel support as well. That is 0 to 1, 1 to 2, and then obviously 2 to 3. That is our first wave. You know, the price, and what do I mean by wave is the price moves in waves. The price moves in a region of from low to high, and then back to a higher low, and then giving us a new higher high. That is one completion of the beginning of a trend. Okay, so if this trend is going to begin the way that is going, we want to count at least 4 waves. So the first wave is this one that comes from this low, make this high, and then we have a higher low over here to make a new higher high, which is higher than that. All right. So the second one, you will start from this level. So I'll take this one out now. So the second one comes in here. This is 0 to 1, the second part, and then we're forming a higher high over here, right? So technically what you want to do is, if you're following it down like this, you can then look for what is the Fibonacci relationship that I'm seeing in this. From that to that, where does my second so equally, you can see that we have this 0 to 1, which is 78.6, right? And that 78.6 actually projected us to a level of 1.272 to 1.318. I will talk a bit more about that probably in our coming classes. Well, what I wanted to show you is you've actually seen that, okay, when we come from this beginning of the wave coming down to 78.6, we've got a projection that gets to a level of 1.382. Another big level that could have been is this 1.618, and that's what I want us to pay attention to. But because the wave 2 kind of literally give us this dip, right, to this level,
Okay.
what we want to do is we want to measure now what wave 2 deep is like. So wave 2 deep gives us from this low coming back down to this particular high. This is not a much of a deeper retracement, right? And there's a bit of explanation with that wave as well. When you see the first move with a very, very huge impulsive move, as we've seen on this one, the second one can usually follow a very, very huge impulsive move. And then the third wave and the fourth wave can now be very draggy, right? Till we approach that key levels that we are going to over here. I will try and explain deeper into that as we're going, but let's investigate this wave 2. The second wave from 0 to 1, which is that the second wave begins from here. This one and gives us this retracement that nearly hit at 8.6, and then obviously we should be looking, yeah, it is recorded. We should be looking at this 618. All right, so this level is now becoming significant. The middle of the channel, and then the 618 that is present over there is now giving us a much significant sense to possibly look for that little bit of a dip, right? Which means the entry wouldn't come in for a new buy opportunity until we possibly attain this area and then see a bit of a dip, because we have the middle of the channel over there. We have 618 over there as well. And then we can see a bit of a dip. And when we see that bit of a dip, it can give us the opportunity to come and buy back either around this resistance. So our buying opportunity, it's either we buy now, right? And where is the risk going to be? Instead of me choosing as the market opens, because the next move is an impulsive move that we are seeing, the risk, there's one level of risk over here at this low. The second level of risk is over here, right there. So what you really want to do is the level of risk that is closer to the price, you want to actually wave that in a way, because you can quickly see a quick dip below it and comes to this level. So this would have been an ideal significant level to look for a buying opportunity based on the chart structure. And what this level is going to give you is going to give you an area of is going to give you a previous area of support, which is a previous area of resistance, a role reversal area, which is a previous level of resistance now turning into support. All right, so if you measure this, you can measure and say to yourself that, okay, there's a risk of about 27 pips stop that I can identify, and that stop is even acting on a previous level of daily channel. So I will be looking at this area to hold more than anything else. If price manage to dip down from this level of high for our third wave of continuation before we get to this potential high. So I have already deduced that, okay, if I'm going to have a next trade on this, my next trade will fall on an area of previous role reversal, which is this area of previous resistance. And then at the same time, not only that, it will then become a very good location for me to take advantage of. Please bear with me a second. All right. So you have noted some key levels over there, but my own major key levels, right? I don't want to look at the short-term charts, because this is where the problem begins for most traders. I know my daily area is there, so this is good area for me, and I know my weekly area is there. That is a good area for me at the same time as well. So the weekly, the higher the time frame, the better an area to look for a trading opportunity. That is what we want to attain, rather than just breaking things down on the lower time frame alone. So if we look at another Aussie pair, and then we look at AUDCAD now. I've got 2 minutes to go on this. I'll see if I can do another 40 minutes when this short video ends. So what we are doing again is the AUDCAD is not as strong as the Aussie yen, because what we've done is we've traded below the low of previous month, right? And every single thing that's happened can start to become a sell-off, and this can be a bonus sell-off for us. That is just the first idea that I see over here. Because we have a bit of rejection over here and we haven't traded above this rejection, we can then start to look at this rejection, that can we have a month that will give us there's a particular candlestick signal, that will be the evening star or the morning star. I don't want to mix them up too much, whereby everything that's gone up here can continue to sell off down. All right, so we can see that. So the Aussie is actually stronger than the yen, but it's not as strong than the CAD, looking at all the monthly move that has currently occurred. So what do we want to do is we want to look at the monthly levels again. Look at this area of significant on the monthly. That level, price is still far away from it, so it's not going to be that much relevant. We go to weekly and look for where price is closer. So on our weekly chart, one significant levels that we can see that's a high level will be this. I want to change that color so that I can know that, okay, I'm approaching a weekly level. There's one little weekly level over here at the same time as well, which is, we can't neglect it. Any area of weekly resistance can be of huge significance, and that is where you want to act. Every other place, you just want to leave the price to get there for you to take advantage. This will help you to scale off all the negative bad trades, right? Because the price hasn't hit it. So this chart, you know that it's just a chart that you can come back to. We are still at 98.52. We are going to almost, we need another 100 pips for us to get to this side. So you know that this is a chart that